See, today we got some hot takes. Had to take a sip of that coffee. 4 in the afternoon, an hour after market close, because I believe we got something big coming. I believe tomorrow, on top of this, before markets even open, you will have your determining factor as well. So we need to dive into the S&P 500 and, of course, the Nasdaq 100. We look at the action over the past 2-3 trading days, and we've had some retracement. We've had a little bit of slip to the slide, if you will. And the question, though, when we look at this is what's happening based on volume? Are we getting a actual reversal? Or is this kind of more of the same when we zoom out to the chart? We get lackluster selling followed by increased buying, right? And this is what I encourage you to do before you jump to any conclusions. Before we pick a side of the trade, take a step back, zoom out on the chart, and just let's look at the action that we've had so far. And when we look at the daily, beautiful so far. But we have to be prepared for the reality of a retracement. We're talking about the fear and greed. We're talking about, are we overextended? Is inflation coming back into the mix? And so, to not even waste time, tomorrow morning, 9 a.m. Eastern, so 30 minutes before market open, you have Powell testifying. Powell's giving his little bit of a take. We got a touch of that last week. So we'll get a little bit more about this. In my opinion, this is the biggest thing that will have a potential downside effect on the economy this week. And I believe personally, as we look at what Powell and some of these Fed members say, that we need to do one thing. We need to understand something. When we go back to the charts and we look at what has led, across the board, let's go to something like, we'll go to SPY. We'll go to SPY, look at the daily. We'll look here. When we look at SPY, what has led to every massive, push to the downside? Something that we've said here frequently, very common denominators, at all these, major levels, okay? That led to some decent selling. Also, too, my favorite part of the video, if you got anything out of this, consider liking and subscribing. I'm not going to go too much into this, but it would help out. We appreciate it. If you are interested as well, the Discord link is down below. Again, I never want people to feel pressure to join Discord. We have Instagram, Twitter. We do YouTube lives every single day. YouTube, we're answering questions across the board. We have the newsletter link down below, which, might I say, destroyed it. I just posted that on Twitter as well, as you can see here. This was absolutely free. Just post this on Twitter. You can literally go and read this for yourself. Just one example. You can see Tesla 260. We talked about exactly where you were going, 273.9. We hit that on the first day here on Tesla as well. So again, we have so much free content if you want that, right? But if you want to get around traders like yourself, you want to take that next step and you want to start, being a little bit more accountable. I think Discord can help you. I think Discord is awesome. And we have over 900. We're so close to hitting 1,000 guys. And we're just absolutely killing it. So again, if you want, consider it. Let's get back to the video. And the common denominator was really bad news. We had Jackson Hole. They said they're going to keep raising rates, go to 75 BPS. We had last July, the first 75 BPS hike. We had, back here in March, continued inflation pain rising and rising and rising. Back here February, what do we have there? Russia invades Ukraine. The list goes on, right? You go into, February through March, the banking collapse. You have December, a little bit more of saying they're not going to pause yet. They're still raising rates. Market was pricing in a pause back in December, even though we knew it was coming in July and June. That's what was happening. But the rabbit in the magician's hat here is something that we're not thinking about. Has bad news came out in this area. Since we've bottomed in March, I mean, honestly, you bottomed in, last October, but has there been bad news since March, since the banking crisis, when we're supposed to fall into this massive recession, which I would argue we've already been in that recession. I would argue from 2022 was the recession year on the market. I'm just gonna say Okay. So when we look at the reality of where we're at and what's happening, I'm just going to say this right now. In order for us to break back down to make lower lows, I believe we're going to have some bad information pushed out to us. Now, I'm going to say this right now. I don't see CPI, PPI, PCE coming in terrible over the next few weeks or months. Why? Because oil and energy continue to keep this train afloat. As we looked at the last PPI reading and CPI reading, we looked at all that key data and we saw oil and energy prices were dropping and dropping and dropping. That's why core inflation is the sticky one, and that's what we continue to talk about. But they can attack, they can tighten, and they can attack that without raising rates. So again, my assumption so far is that until bad data comes out, rising CPI, rising PPI, rising core inflation, we will continue to stay paused. Don't shoot the messenger. Okay. Now, into what Powell is saying tomorrow. Powell's going to come in. He's going to come out aggressive. I do think so. Because Powell right now has a job. And people are, I believe, we're misinterpreting what Powell said last week. You see, Powell can't come out and say that we're not going to raise rates ever again. We're not going to raise this. We're done for this cycle. He cannot come out and say that. Because it's like we've been talking about the past few weeks and months, is he has to stay nimble. It's what he's been saying until he was pausing the rates. He cannot pause rates until data gives him a reason to. Just like he's going to keep rates paused until data tells him not to do so. So we're reacting to said data. In my opinion, you will have a pretty good viewpoint of when they're going to either raise them back or keep them paused. They're not just going to, if we stay where we're at right now, they're not going to come out next meeting like, okay, guys, hey, inflation hasn't rose, but let's raise those rates a little bit more. Maybe we can get this stock market going back to the downside. It's really good for our jobs. That's not what they're going to say. Just, hear me out. Personal opinion. I'm done with the Powell spiel, okay? So let's look at ES. Let's look at some of this movement that we've had. Now, what I want to talk about is here specifically on SPY. We're going to refresh that, look at the volume. As you can see here, you can see as we pushed into these highs on June 15th, we had increased volume. Okay, can we all agree? Increased volume. So June 15th, increased volume. June 16th, we had a little bit more volume, 114 mil. Okay, so we raised, got rejected from highs and started pushing back towards the downside on SPY. Can agree on that. Raising volume, slowed down, pushing back down as we speak. Okay, so this is right here, the 15th, 16th, we spike, hit the top, getting rejected. Okay, we're good. We're all on the same page here. As we are dropping, volume is declining. And today we saw a massive decline, almost cutting it in half. Slicing the loaf of bread in half here. Sellers dissipated. Now, I will say it makes sense to slow down into Powell speaking tomorrow. It makes sense. That being said, once again, as we look at volume, as we look at the action on the market, sellers had every opportunity today to push us down. As you can see this morning when we had the little early drop in 9:30, there were no buyers here. No buyers. We had a little bit of a wall here. They kind of mounted up, and then no buyers again until around 44.10. But they didn't set up shop until you got down at lows. Okay? Right? As you can see. Right? And on top of that, we look at CVD, and we look at the action that took place here. This is Bookmap, by the way. The link is down below if you want to check these guys out. And as you can see, CVD just, sellers take over here. The rest of the day with minimal volume, sellers should easily be pushing us down. CVD climbs back towards the upside, right? Just pathetic action. Even with CVD dropping back into the red, even with, volume and sellers trying to take control here, damn near lows on the day where you were at lows here. I mean, they can't even push you back down. So again, this is personal opinion on where we're at and how we're moving. Is sellers continue to show weakness. And that's why I continue to say, in order for ES to make a lower low, and to make a lower low, you'd probably have to push down below like 4,200 at this point. But in order to do that, you're going to have bad. I have to put emphasis on that. So hopefully we get it through those skulls. Because some people are still trying to short down in the comments. We're like, I'm shorting NVIDIA. I wish I had $1 for every time I read one of those those comments. It's like, hey, I'm short Nvidia. Meanwhile, Nvidia continues to make all-time highs day after day after day. I'm short in Tesla, Tyler. That one's going down. Literally only going up. Only going up. Okay? So when we continue to look at this train of what's happening, it's like, look, market still looks like a risk-on mentality. Okay? And if you're trying to take these trades, and you're trying to get active in the market, you need to consider this. Interactive Brokers, game-changing broker. Right now, I don't get a dime if you sign up with these guys. I just recommend that you go down, links down below, just check them out. Check out the fills, check out the platform. It's not about the UI on the platform. I'm going to tell you that right now. Everyone's obsessed with UI and how things look. You need to, if you're a day trader and a scalper specifically, you need to have a broker that's going to give you the best entries and exits based on fills. And so far, Interactive Brokers has done exactly that for myself. Just saying, I can almost guarantee if you try them, you will not be dissatisfied. I will say though, the desktop UI is not beautiful. I'm unbiased here. I'm unbiased. Phone app, completely revamped, looks hot, looks primo. Okay? So when we get back into Tesla, we get back into this action, it leads me to this belief of we don't look bad. Now, let's take a quick trip back down to what's happening with the Russell, right? Because I think the Russell is, to a certain extent, what signaled a lot of this potential movement to the upside. Now, RTY, the Russell, which is like ES to S&P, the futures version, you don't really get a test here. IWM, though, very, very interesting date. I'll have this on Twitter later, too, for you guys. Look at the test of the 200 MA on the weekly. Look at that action. Again, buyers showing up, right? Isn't it interesting that buyers continue to show up at every major level? It has to leave you with this idea of, could a bottom possibly be in? Am I telling you to hammer calls and go long? It's not what I'm saying. I'm asking you to take a step back and just look at the market and where it's at. And look at the last time we had potentially had an opportunity like this. To when the Russell mounted 200 SMA, go back to January 18th. That's the last time you touched this 200. You broke, touched, and look where you went in a matter of, a week and a half. Right? I'm just saying. Even on some of the false breakouts here, boom, boom, nice, great risk reward here, over and over. And then if you really want to get heartbroken, you go back to 2020, right? You go way back. Can't even go that far back. You come back here. Look at your reaction. Look at these aggressive moves of buyers showing up time and time and time again. Again, for me, it leads me to be curious at the very least of, if a bottom is in, do I want to take the opportunity to think that I'm smarter than what's happening here and what big money's doing? Am I smarter than them? And I have the data that no one else has, and we're going to come collapsing down after we've already dropped 40% on the market, on the Nasdaq and S&P. We're already getting back into highs. Apple's hit all-time highs again. Microsoft, Nvidia. The list is going to continue to go on, right? For months, we've had this argument of, guys, I did my research. I was on Twitter all night. I was on Investopedia, and then I got on Reddit, and I got this beautiful strategy figured out. I ask you, look at what's worked and look at what has not worked. And here on the channel, I believe we have stayed true and consistent to what has worked, which is price action, supply and demand, understanding volume, what's taking place here. Not only looking at the fundamentals, but also the technicals, which I think speak very clearly to us right now. Just saying. Really quick looking at Dow. Very nice. I mean, can you not get excited about looking at some of these charts? Look at something like Dow. You break over, and I get it. You're going to say, Tyler, there's an island reversal. I get it. Your candle patterns, we love them. bless up, right? You're coming back down, testing, previous highs you had here. Still have that inverted head and shoulders that looks pretty fantastic as well. Okay. Hold on the 200 SMA as well in the daily. Just saying. So the point of today's video is not to push you into buying or push you into selling. Point of today's video is to push you to think about what's happening and where we're at. I think over the past week or 2 weeks, I kept saying opportunity, be patient, opportunity. I want this week's theme, this week's thesis to be, am I looking at the entire picture? Right? Am I being unbiased with the entire picture? I see a lot of people sending in emails, sending in questions, right? And I love answering questions to the comments down below and on Twitter, everywhere, Instagram, everywhere, right? We try to be as engaging as possible with you guys, and I love it. I really do. Discord kills it, but I love having a community of people, not just in Discord, but on Twitter, Instagram, YouTube, that we're like-minded, focused on one thing, making money in the market. I absolutely love it. I live for it. I love it so much. But I want us as a community to question the idea of, are we running with ideas that someone else may have, or are we taking a step back and thinking for ourselves and putting in our own amount of work into having our own opinion on the market and where we're going? Because if you ever want to get to that next step in trading, that next step in the market, and that next step in anything in life, in my opinion, I believe you have to let go of that hand that you've been holding, the pocket that you've been holding, right? Following around and praying that guy's leading you to the right direction, the man, woman, whoever. And you got to start doing it for yourself. So this week, I encourage you, take a step back, do some charting for yourself. Listen to Powell. Powell's going to be really big. I could say all this, and Powell could say recession is coming, inflation's through the roof, we have to raise again next month, right? It was a mistake to not raise. He could say all that, and we can go plummeting back down. That'd be really bad news, like I was saying earlier. But understand what's moving us, what's caused previous drops, what's caused maybe drops in the past 2 months, what's caused drops last year, what's caused us to continue to push up in previous years. Start putting in the work. Comment down below if you have questions. We would love to answer those. But I encourage you this week, put in some work.